the application itself. Let me make this a little larger so that I can see. Go to my window. So I think one of the questions earlier was, I've seen 2 different applications. So just to reiterate that, if you've participated in the Bond Bank's January program, then you are required to just complete your supplemental application. And you'll see it's very streamlined. Basically, just making sure we have the correct contact information and those a couple of base questions when you need funds, and to let us know if anything has materially changed since that initial application. So the application I'm going to quickly walk through just in lieu of time today is a new participant. So if you didn't participate in January, this is the application that you would need to complete. The first page is just basic info, your contact information. We want to make sure we can get a hold of you. Have you check off what type of government unit that you are. Key information on this first page is, of course, the contact information. And Alicia, if you could scroll down so you can see the bottom. And then here you'll see we start asking for when your board meetings are. Those are key because that then gives the dates to Dennis Otten and the BOES team to make sure they get those resolutions and ordinances out to you in time so that your board or council can take the action they need to. A key question towards the bottom application and onto the second page is when you need funds. I know we've alluded to on multiple times throughout the webinar that we are offering a multitude of dates for closing. So this is at this time is when you expect to that you would need funds. Keep in mind, if you select May 7th and you send your application in, and then maybe you get an advance or something changes and you want to push that back, just always make sure you're communicating with the bond bank. So they're there for open communication. Scrolling down. Here's when you actually select which funds you need to borrow in. If you're not sure, maybe you think you need your general fund and debt service, or maybe you're just not too sure, you can always list those funds and we can take a look. And then if it doesn't make sense to borrow, you don't have to. But this way, at least we know that we're getting the documents that Dennis and his team will draft, and they'll authorize the ability to borrow in those funds. So I always say, if you're not sure, I would just, proceed on the side of caution and go ahead so we can set it up so that it gives you the most flexibility. Some basic questions there. One of the first items that we do need to account and rely on you all to provide is looking at the debt profile. And what we're asking there is, did you already issue tax warrants? Have you done this earlier in the year, or did you do this last year? The purpose really is just to make sure we understand what you have outstanding. We want to make sure that we're not loaning against a revenue stream that may already be committed, so we can understand what that looks like. Moving down. Question 2 is asking for your annual debt service payments. So you can always go to your DLGF gateway and download your debt payments so we can get an understanding of what those look like. A lot of these questions are really driven by the need is that this is the information that we have to share when the bond bank goes to issue its note. So when we go out to the open market and get a bond rating, S&P likes to look at this information. So this is why you see some of these questions we do need to count on you from, is really to make sure we're meeting their needs. If you could scroll down, Alicia. Here again is just general information. Are you expecting to issue more debt? And if so, give us an idea of what that looks like. Go ahead and scroll down. Let's go to the next page. Questions at the top, a lot of these are kind of yes, no questions. Have you ever had a default? Really just making sure we understand that kind of where you guys are. Looking at your budgeted sources of revenue. A lot of this you can pull from your fund report or your 1782 to help answer. So I would say make sure as you're filling out maybe this and even the cash flow to have those annual financial reports handy, because that'll be a really good resource as you're looking to fill out this information. And of course, if you're struggling on any of these questions, always feel free to reach out to Ron at the bond bank, and then he'll take a first shot. And if he needs help as well, or if it's something he and I need a tag team, the Crow team is also here to help you answer any questions or provide you in the direction of getting some of these questions answered. Looking at question number 6, this is a really important question. So I do want to take a minute just to point that out. is that you may only want to borrow in your debt service fund. Say that's the only fund you're really concerned with, and you feel really good about what your cash position looks like in an operating fund. So here's where you would actually say, you know what, I'm not going to borrow in my operating fund, and I expect that we're going to end the year with $2 million. This is a key question that the rating agencies look at in quite a bit of detail and put a lot of weight on. So I would ask folks to really just think about question number 6. Some ideas of what to do if you're trying to figure that out and say, what am I going to have at the end of the year? Again, you can always kind of start with your beginning cash balance for January 1 of 2020. Add in your estimated property tax levy of what you actually expect to collect. And then using your budget, you can look at your budget itself, add in your estimated revenues from the year, less your expenditures, or looking at that line 11 on your fund report or your 16-line statement. That's a good indication for what your expected cash balance is. So those are also good sources if you're struggling with that question. And again, I'm here to help if you have questions on how to figure that out or just need some assistance and guidance. Looking into question 7, really just looking for your total levy. So that we can pull from your budget order that gives the total amount of you're going to levy for the year. And then if you've received any advances. For some of you who may be wanting to participate early on, that answer to that question could easily be 0. So you may not have received any property taxes yet this year. For others, if you're waiting to participate in the later months, you may have already received a property tax advance from your county. And that's what we'd ask, just to put that dollar value in that blank. Moving down, Alicia. Economic profile. Just let us know if anything is significant that's going on in your area, whether it's a positive, a new business, or maybe it's a negative, maybe a manufacturing plant has closed, and just kind of capture anything that's a worthy note for us to know about. Your large taxpayer information. What we're looking at here is wanting to understand kind of who makes up your tax base. How much is coming from either one large taxpayer or maybe a group of taxpayers. Maybe you have 5 different RV manufacturers in your area, so it's more of an industry base. This information can be obtained from your county auditor, and just reaching out and asking for them to provide you their top 10 taxpayers. And then that information will be collected and included here in question 10. Scrolling down. Question 11 is really looking to see who employs a lot of the your community members. This information is usually best obtained by reaching out to either your city chamber of commerce or maybe your county. So really looking out to see, reaching out to whatever, depending on where you're located. The Chamber of Commerce usually has pretty good information on top employers. Scrolling down. You'll see in the past, if you may have participated, that we've removed a lot of the information, as Mark mentioned. So the team internally will be pulling all the historical information as it relates to taxes levied, collected, assessed valuation, circuit breaker loss. All that we're just doing in-house. So we've really tried to streamline the key pieces of information that we need you all to help us provide and get answers to. And then lastly, these few questions here is for school districts, just the enrollment numbers. Those are always important. And then some general continuing disclosure information questions. Just making sure that if you do have a debt outstanding, that you're aware of some of those requirements so we get an understanding of what that compliance looks like. Scrolling down. And then lastly, it's really just kind of giving us some direction on how you need to receive your paperwork. If it's all electronically, this allows Bose, Dennis, and his team to know how to get you the information. And then there's some attachments that we need you also to provide. One is the cash flow, which we'll walk through, and kind of gives you some ideas on what that needs to look like. And then just if you had any help, if anyone helped you fill out the application, to of course include their information here. That way, if we have any follow-up, we then also know who else to reach out to help ease the burden on you as well in case you did have assistance. And that really is the full complete application. So you'll see there's 8 pages of application. yet the information that we're really looking for is probably closer to 3 to 4 pages. And a lot of that too is information that you'll have handy. If this was a supplemental application, that application I think itself is 4 pages. So then it's 2 pages of information. So we're really looking to make this as streamlined as possible for anyone who participates. Any questions on the application? We've seen any of those come in? I don't think so. So I'm not seeing anything on the application. I think we'll go to the cash flow. Thanks, Alicia. If we could scroll up, there we go. So the cash flow itself is for 3 years. And what it is, it allows us to want to review and analyze 2 years of your historical data and then a projection of 2020. So what you see here is your 2018. And I would recommend pulling your annual financial report because that's going to have a lot of the information that you need. And that's going to be a good resource as you complete this cash flow. I'd also would state is that I know sometimes it seems like a lot to want to have to complete this information. So I would just encourage folks to use this as an ongoing tool because I think you could find it beneficial that if you track this then on an ongoing basis, it could be something that you use as part of your toolkit to have a good handle on what your cash flows are. I'm just going to walk through kind of each of these items to give you guys a sense of what we need and what type of information gets included here. So the first page of our cash flow, you'll see at the top, you'll write your name, entity's name, your contact information, telephone and email. To the right is where you'll include the fund. So if you're participating in the general fund, you would write in general in that cell. Or if this is a debt service fund, you would write debt service. It's key that each fund that you need to borrow in, each fund will need to have its cash flow. So we have to look at these on an individual basis. If you go to that first cell that's yellow, all those that are yellow are ones that we need you to input. Everything else then is a formula. So those that actually need you to key in numbers are all highlighted yellow. So what you would do here is have your 2018 annual financial report in front of you. And I'm going to pretend this is my general fund. I'm going to hard code that beginning balance and actually enter that into that cell. I then am going to look at the types of revenues I need to disclose. I need to know my property taxes, which you can pull from that report. Any state aid. What we're thinking there is mostly applicable to schools. That's your tuition support. So if you're a city or town, state aid may not mean anything, and that's okay. You can leave that blank. Your 2018 bond bank warrants, if you borrowed in the past, that's where you would have that borrowing, the receipt. If you had a loan, maybe you had a loan from another bank, maybe you had an interfund loan from another fund, you would show that receipt, and then everything else. So we're not asking you to break down all of your expenses by a lot of different line items. Really, we want to be able to see the property tax revenues, other loans, and then everything else can get lumped in to that one line. Same for expenditures. Expenditures, we're looking for your wages and salaries. So really that category 1 from your budget. Again, any loan repayments, whether it was to the bond bank or to other temporary loans, and all other expenditures. So that when I get to my cumulative fund balance at the end of 2018, that December 31 balance should match the ending cash balance on your annual financial report. Again, that's just a check. It lets you know that you have all the information entered correctly. Then if you scroll to the right, you'll see it's the exact same information for 2019. Same information gets inputted. All said and done, you want to make sure that that ending cumulative fund balance for December matches how you actually ended the year in that particular fund for December 31 of 2019. Both of those are the historical cash flows that I was referring to. We now move into the third portion of the cash flow, and this is the projection piece. This is where we actually want to determine what is that cash flow need you're going to have. Where are you going to have any shortfalls? And one question I have is on the property tax line, do you include your CVETs, your FIT excise? We would ask you to include those in your other receipts. What I want to be able to do when I look at the cash flow is we need to be able to compare that certified fund levy to the property tax line itself. That allows us to know what is your average tax collection percentage. So if you have questions on other types of tax revenues, all those would just get thrown into that all other line. The only thing we see in the property tax line is indeed actual property tax collections from your certified tax levy and tax rate. So looking into 2020, again, you would pull your certified fund levy, your estimated circuit breaker. If you're unsure what that loss is, you can leave that blank and then we'll pull that information. So if that becomes a struggle on figuring what that is, I would just encourage you to leave that as is. And then the CRO team will work with the bond bank and we'll complete that portion for you. So don't get hung up on trying to figure out what that actual circuit breaker loss is per fund. We'll work on that. Looking into the information, you'll see a lot of it is about the same. You're going to enter your actual receipts and expenditures for the months of January and February. And then you have to do some estimation. So then we get into the month of March. It looks like we maybe have a couple column hidden there. But you would then estimate out your cash flows from March through the end of the year. A good way to look at that is to pull and see what your authorizing body approved for your 2020 budget. Take that less what's already spent or what's been received, and then take that over the time period. For some of you, it may be easier because perhaps you have equal expenditure timelines. You pay the same amount for wages. Others, it may vary. Like if you have different needs and different wages, maybe you have a parks fund where it's heavier during the summertime, or a school where you have summer month pay. So just keep that in mind as you're filling out those expenditures and those revenues. And once this information is completed, what we'll do is really look at the bottom half of your cash flow. And this will also dictate how much you're able to borrow. The program limits you to the lesser of your maximum deficit. So really when you have that cash flow need, or 80% of your tax collection. So for example, if you collected monies in the month of December, we're going to limit you to 80% of those property tax collections or your largest deficit. And all of this and that information is formulaic, and we'll calculate that for us based on your inputs to the actual cash flow. A key thing to keep in mind as you're completing this is to not include your estimated borrowing from this mid-year tax warrant program. We actually want to be able to see a negative in that cumulative fund balance, because that tells us how much you actually need to borrow and what month you need those funds. See if we have any questions coming in. I see another one down here. I have a question from a school. Let's see, we are a school corporation that uses a waiver program so we can move funds to our operations from debt service. I think if there are instances like that you are under a waiver program, I would say to go ahead and set your cash flow up as you expect the year to look, and then provide that information when you submit your application, or provide an additional email of any special circumstance or something we need to look at. That just helps us in our review, so we have an understanding then when we look at your cash flow to understand what you're trying to tell us. So I would just say to go ahead and do your cash flow as expected, and then if there are certain circumstances, then just to make sure those are known in your application, whether in the comment section or just in the email to the bond bank, and they share that information with the CRO team as well. Are there any questions on cash flows?
Hey, Angie, this is
Yep.
Ron. There are several questions about how to project cash flows or projecting property tax distribution, especially since escrow accounts will be paying most likely timely and those will not. If you could address how to do projections of when property taxes will be distributed, that should answer 2 or 3 of the questions that we've received.
Sure. So again, it's when you're looking at that tax distribution, when should you show that first receipt? So I think I'd hit on this earlier when I had suggested always kind of getting an understanding of how much of your taxing district actually has the escrows paid by a mortgage. I think you can also get a good sense of looking back to prior years, especially if you're an entity that has received an advance. You could then begin to show maybe a small portion of your property tax receipts in the month of June, And then the remaining, though, of that major distribution, I would suggest showing either in July or more so even the month of August. That way you're covered in case taxes are less than you expect or delay, that you have the funds so you don't run into any cash flow shortfalls, and then you would repay those monies then at that when that distribution is received. Let's see. One question is, you expect to go negative in the middle of June. How do we show that based on the monthly grid? So that question has come up and something we've seen before in the past. We look at cash flows on a monthly basis. So the concern is, well, gosh, what if my deficit's in the middle or at the beginning and I don't show a deficit, but no, I need to. I would suggest just pushing some of those receipts then that you normally would get in June into July, or pulling some of those expenditures forward just to make sure then that you know you're getting the monies when you need to. So that's how I would address for some of those cash flow deficits that may not be reflected on the monthly basis just from timing. And that's how we've addressed those in the past. One of the questions is about the escrowed accounts. What does that look like for each county? We have started working on pulling some of that information and working with AIC on getting that. It may be worth just a call to your county auditor and just say, hey, we're working on estimates. Do you know at this time a best estimate for us on what percentage we could have maybe try to assume in June? I think a lot of that information we're going to start working on, and we're going to start seeing that come in probably in May. I think a lot of folks, from what I'm hearing, are going to start requesting for advanced draws. So we'll start seeing some of those come in. But I think, like I said earlier, you can always assume worst case scenario. And then if information does come in, then we can adjust your cash flow and pull some of those taxes forward. Ron, are you seeing other questions?
There's a question about what funds can you borrow from? Can you borrow from utility funds and TIF funds?
And I think we've hit on those, I think, already. I think at this point, this mid-year program and this cash flow template is built for a property tax levy and set up that way. So at this time, this particular program would not provide for those funds unless, for example, on your TIF, you actually have a levy in place. So maybe it's a TIF/special benefits tax where there's a tax levy. I think that's a discussion I think, as Mark had mentioned, as a team, we're going to continue to have to see if there are ways to assist with those type of needs. However, those would be outside of this program that we're talking about today.
Angie, there's also a question about repayment of your tax warrants, and can you pay that from your debt service fund? Can you pay the interest from your debt service fund?
I think given that one, I'll see if Dennis has any. I'll turn it over to Bose to see what their thoughts are on actual repayment of those, of how that's set up in the QE warrant agreements.
Yeah, this hasn't been an issue before, and this is, I think, the first time we've been asked this question. But for the schools, it can be paid from the debt service fund, or it can be paid from their operating fund, or whatever fund you draw the warrants on. We don't think you need to make an appropriation. And the documents clearly authorize the payment of principal and interest from the fund. We typically do kind of put an allowance in the documents that if you want to, you can pay it from the debt service fund, but we don't think you need to make a separate appropriation for that purpose.
Thanks, Dennis.
There's one more question that I will address regarding what if you need money later in the year. I think Mark has addressed that. We show our last closing in late July, but if you need funds in April, or excuse me, in August or later, we will address those needs. So if you need funds in late 2020, the bond bank will be there to serve you. We just need to have an indication of when you think you need those funds so we can properly set up the program and have the process set up for you.
Right, to piggyback on that question, Ron, what I think this, since we have that last application on the timeline showing May 22nd, if we have an August, September, October, or so on rounds available, we'll let you know that before May 22nd, and so we'll have those kind of trickle on dates down further. So we'll know before May the 22nd. If those rounds were to open up, what those new dates for application and cash flow and all those would be set in advance of what's currently the final date. So Ron's exactly right on that.
Then I see a couple of questions I'll try to hit too. I think we had one regarding estimating your December 31 cash balances for non-participating funds. Yeah, Brian, you do not have to assume that you spend every dollar down, because I know that in many cases that's not the case. So I would say, I suggest using your budget. Really, it's just kind of a baseline to help make that analysis. And then if you know that you retain additional fund balance, then I would include that in your operating. That's really just an estimate. So do whatever makes the most sense for your entity. If you do know that you're not going to spend every single dollar that's authorized by your board, don't assume you spend it then for purposes of cash balance. That just helps the program itself as well, because it does show a stronger cash balance for your entity. Question on here regarding, are counties required to advance funds? They are not. So counties are not required to advance. However, unless the unit actually makes a request to the county treasurer. So the bond bank is looking to help streamline that process. But right now the process is, if you're a government unit, that you do by statute have the ability to request an advance draw up to 95% of your distribution. So when county auditors receive that, that directive, then they do actually advance those money. Though there isn't anything that I've seen thus far that they just do it on their own. That wasn't addressed in the most recent order. I don't know, Brad, if you want to add anything to that as well, because I know you've been really keyed in on that process.
No, thanks, Ange. That question has come up several times, and I agree with everything you said. As it stands as of now, there is not a requirement that an auditor or treasurer provide that advance if it's requested. I think the auditor of state has sent out some guidance to all 92 county auditors requesting that they do so, that they do provide an advance in the mid-August timeframe, in recognition of the taxes that are collected following the end of the 60-day waiver period. That's just one of those things the bond bank will continue to monitor and do what we can to kind of help push that along, so that, again, recognizing that delay is caused by the 60-day waiver.
Thanks, Brad. See, there's another question, it looks like, on estimating miscellaneous revenue. I think there is that uncertainty whether revenues are going to come in exactly like everyone's thinking, given the market and just the environment that we're living in. So I think you could start off by looking at what you had estimated at the beginning of the year of what was approved for your budget, and then look at that. And then if you're not comfortable, you could always make a reduction to those revenues and to reduce those to be safe. I wish I could tell you the exact percentage. I haven't seen anything. I haven't seen anything come out yet from the state on direction on those revenues, which really is a good source for that information yet. So I think at this point, we ask you guys to use your best estimates of what you know and just what you know at the time. And if information does come out on state revenues, then we can always have constant communication with the group on any changes that need to be made. But as of right now, it's kind of using your best guess on what that cash flow would look like. Looks like we have one question, and Dennis, this was a question that had came up in an email to you that I had posed yesterday. So do you want to hit this one up?
Sure, Ange. Is this the,
This
I can't see the question.
Oh, this has to do with additional appropriation. So it says, would we have to do an additional appropriation of debt service fund in order to pay the interest? Because they currently didn't know about the tax warrant and didn't have an appropriation for short-term interest.
Oh, yeah, okay, and I think I may have addressed this earlier, but our view is you need to do an additional appropriation for that. As long as you've got money in your debt service fund that you can use to pay obligations, we think that you could use that to go ahead and pay the interest on the warrants. And we've also got throughout the documents authorization for payment of principal and interest, and this is covered in the resolution that gets adopted by the board. So as long as there's sufficient funds in there for that purpose, you should be fine.
Not seeing any other questions coming in.
Very good. You want to, at least you want to advance the slide to, gosh, I think we've Hopefully that spirit has been very clear. What questions might we answer? I've gone through those questions. And really thank you all as we look to wrap. Please complete the participation survey if you think this program may be a resource. Local government around the state and you as local leaders are, the pulse of Indiana. I mean, the communities that we live in, the schools that our children attend, the libraries we visit, the police and fire services, you are all just the fundamental fabric of this state. And I know I speak for the treasurer in that regard. I speak for the entire bond bank team, that anything we can do to serve you as we navigate these interesting times, this is what this team is here for. This is why we exist. And so, again, please view us as a resource. We hope that you found this information helpful, and that if you have any further questions about the advanced funding program, the Indiana Bond Bank, or ways we might assist you during this COVID-19 time, please do not hesitate to reach out. We've got Midyear at indianabondbank.com. All our team is responsive. Our phone numbers still will ring directly to us. And so we are here to serve you. So please reach out, take advantage of the program, the resource that we have available here. And we hope to talk to you very soon. Thank you.